Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COGNEX CORP quarterly report. COGNEX Corporation offers a wide range of machine vision products and services to various industries worldwide. Its key offerings include machine vision software, Vision Pro Insight product line of vision systems and sensors, quick build for graphical programming interface dataman for image-based barcode readers and verifiers, vision accessories, plus industrial cameras, plus lenses, plus lighting, plus vision controllers, plus frame grabbers, plus I/O cards. These products are sold to industries such as automotive, logistics, consumer electronics, medical-related, semiconductor, consumer products, and food and beverage through a network of distributors and integrators. The COGNEX Corp stock price has made no significant changes in the past year due to a balance of various factors. The company's third quarter 2025 earnings report showed an 18% revenue growth, but also led to a 13.5% drop in the stock price on October 30, 2025, after lowering its full-year earnings forecast. Other news and events, such as the launch of AI-powered machine vision solutions for the logistics industry and quarterly dividend declarations, had minor impacts on the stock price. Analyst rating changes and index updates also occurred during this period, but did not significantly affect the overall annual change. The net increase of 2.99% over the past year suggests that many events may have had a neutral or offsetting effect, resulting in no significant annual change. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, significant increases in unbilled revenue, Americas and Europe revenue, standard products and services revenue, and application-specific customer solutions revenue contributed to overall revenue growth. Additionally, one-time revenue from a commercial partnership with a strategic channel partner added $13 million to the company's revenue. On the decline side, Greater China and other Asia revenue experienced fluctuations, while net income decreased in the three-month period ended September 28, 2025. The drivers of revenue growth or decline include customer demand and order rates, product mix, seasonal and cyclical variations, economic and market volatility, loss of large customers, industry mix, and tariffs. Net income and profit margins shifts. The company's net income experienced contrasting changes over different periods. In the three-month period, it decreased by $11,927, while in the nine-month period, it increased by $3,953. This fluctuation can be attributed to various factors, including stock-based compensation expense, unrealized gain on available-for-sale investment, and a decrease in foreign currency translation adjustment. Profit margins also underwent changes. The gross profit margin decreased by 0.4% and 1.1% in the three-month and nine-month periods, respectively. Conversely, operating profit margins increased by 7.4% and 4.9% over the same periods. These shifts can be linked to a discrete tax expense of $33 million accrued due to United States tax legislation enacted during this period. The mixed performance of net income and profit margins highlights the company's complex financial dynamics. While some areas showed improvement, others experienced decline, indicating the need for further analysis to understand these changes and their implications on the business. The company's financial performance indicates a significant improvement in its operating cash flow. Over the past year, the company has seen a substantial increase in positive operating cash flow from $97,677 to $170,612. This upward trend suggests that the company is effectively managing its finances and generating sufficient revenue to cover its operational expenses, resulting in a positive operating cash flow. The company's debt level has increased significantly from $475,345 to $513,114. However, interest expenses have not shown a substantial change, despite a notable increase in tax expense related to interest expense of $1,286,000 for the nine-month period ended September 28, 2025. This suggests that while the company's debt has grown, its interest expenses remain relatively stable. Management's outlook on company strategy. The company's management expects a strong finish to the year despite mixed results in the first 9 months. They anticipate holding onto debt securities at full value recovery and benefiting from tax savings due to the One Big Beautiful Bill Act, which is estimated to provide between $12 million and $15 million in cash benefits. Management also emphasizes the importance of continued research and development, RD&E activities to maintain product leadership. Additionally, they are committed to returning value to shareholders through a share repurchase program. The company's financial position remains stable, with sufficient cash balances and operating cash flow to meet its needs for the next 12 months. Overall, management is optimistic about the company's future prospects and is focused on delivering innovation while maintaining a strong financial foundation. There were no significant acquisitions or divestitures made by the company in this period. The financial summary indicates a stable and unchanged portfolio, with no notable additions or disposals of assets. The company has a history of paying out dividends to its shareholders. In fact, it is explicitly stated that the company has paid dividends, with specific amounts listed on various pages throughout the financial summary. This includes cash dividends per common share for both 2025 and 2024, as well as dividend payments totaling $40,424,000 in COGNE, Q2 and Q3 of 2025. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights two pressing issues: inventory buildup and potential supply chain disruptions. The evidence of inventory buildup is evident in the increase of excess and obsolete inventory charges, as well as outstanding purchase orders worth $42,597,000. Furthermore, a decrease in raw materials, work in process, and finished goods inventories from 2024 to 2025 may indicate a shift towards reducing inventory levels, but it also raises concerns about potential supply chain disruptions. The mention of managing distribution and direct/indirect supply chain disruptions on page 25 explicitly highlights the concern. This suggests that the company is aware of the risks associated with supply chain disruptions and is taking steps to mitigate them. However, the presence of outstanding purchase orders indicates a potential for inventory buildup, which could exacerbate supply chain issues if not managed properly. Overall, the financial summary paints a picture of a company grappling with inventory buildup and supply chain disruption concerns. That concludes the financial summary for COGNEX CORP. Feel free to comment below, and I will be happy to answer them when possible.